Welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodities, stocks, and the economy. I'm your host, Arlen Hanson. Today, I'm excited to be joined by Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report, which you can read at gloomboomdoom.com. This interview is not investment advice. It is for your listening pleasure only, and I will disclose if any of the companies discussed in today's interview are held by Kin or myself. If I don't disclose, I do not own. If you like this video and you want to see more, hit that like and subscribe button, and let's just jump right into the interview. Marc, thanks so much for joining me today. How are you?
I'm fine, thank you. We had floods here in Thailand,
Oh,
but
yeah.
especially in my house,
Oh,
since
no.
my house is located right next to the river, and we're still cleaning up because the water is not the problem. The problem is that the river carries a lot of mud,
Right.
and we have had everywhere a cover of about 5 inches of mud in the
Right.
bathrooms, in the living room, in the dining room, in my drawers, because I have my desks in my office
Oh, my
and my
goodness.
files. And I mean, there's an unbelievable amount of dirt.
Yeah, no kidding.
Anyway,
Well,
we are used to challenges in life.
yes, we are, right? They make us stronger. Well, Marc, my audience knows I'm a gold and commodities bull, and we're going to go into that a bit. But I want to talk about some of your latest commentary because it's about the psychology and the fear and greed of market, and that's something that really intrigues me. And you just posted it. It was called the 2024 Trump Top. And the words of Sir Arthur Conan Doyle, it is stupidity rather than courage to refuse to recognize danger when it is close upon you. Brilliant. Tell me more about that.
Well, I think that if you look at the markets, and in general, everybody says, oh, I want to buy low and I want to buy and I want to buy low and sell when things are high. That is kind of the frame of mind of people. But when they are in a bull market, they actually buy at any price. When the mood is euphoric. And that is what is happening. The market valuation now, whatever you look at, price to book, price to sale, price to earnings, and so forth, is high. The expectations about future returns are very high. And they are assets that are cheap relative to, say, the farm stocks and the Magnificent Seven and so forth, but people are not particularly interested in. So, and also interesting is, you have these millions of individuals around the world. They all gamble in NVIDIA and in some of these more popular American tech stocks and social media stocks and semiconductors and so forth. And they pile in, and often they have no clue what these companies are doing and so forth. They just heard that they're great companies. And at the same time, you have an investor who has a proven track record, who is a thoughtful investor. I'm not saying that I greatly admire him as a personality, but Warren Buffett is actually increasing his cash position as a percentage of his assets. So that should kind of give you some reasons to think and to ponder what is happening in the marketplace when a proven investor is selling, when insiders, corporate directors are selling at the highest rate in the last few years, and the public is buying.
Mm-hmm. Well, I think that when you talk about like the courage to recognize danger, right? It's like when we get to these positions of euphoria, it's almost like everyone wants to tell you you're an idiot, right? And that's where I think you have to have the courage to be like, no, I don't believe in this inflated prices, and I don't believe in this euphoria right now. So, like the Vancouver mayor of Canada, Marc, announced last week that he wants to consider using Bitcoin as a reserve currency for the city of Vancouver. And those are the things that I believe are showing signs of market euphoria. Like it's just crazy, right? You can't have a reserve currency if it's not accepted by the world, in my opinion. Um, we talked about in the manic phase, people of wealth or credit switch out of money or borrow to buy real or illiquid financial assets. We're seeing that in the market today, are we not?
Yes. I mean, we can measure how much cash institutions have as a percentage of the total assets.
Yeah.
Robert Prechter of the Elliott wave theory produced a chart. It's at the lowest level ever. There are
Yeah.
also other charts that show how much cash global financial institutions have as a percentage of their assets. We also have charts about individuals holding cash as a percent of their overall assets. Everywhere, cash is at the most hated level. Yes, I find this actually quite funny.
Yeah, no, you're right. You're right. Um,
Now,
Go ahead.
I would not necessarily hold all my money in cash because the banking system is not so safe, and in many countries, including Brazil and Cyprus and so forth, cash was taken away.
Hmm.
It was declared worthless.
Yeah, yeah. Well, that brings up another quote here. I love some of the quotes you pull out of your reports here. For most people, the most dangerous self-delusion is that falling asset markets will not affect their specific assets, which they bought out of a canny understanding of value. Now, if we flip that the other way, right? People are hating cash right now, right? And
Yes,
they're absolutely hating cash and they want to buy these stocks that have been rising and rising and rising. So they're totally delusional that they can fall again, right? Like
yes, yes.
they don't believe that American can take their cash or the banking system will take their cash. I was just talking to Bill Holter the other day, and he talked about we are the last people to get our money back if something fails by far. Right.
Yes, yes, I agree.
Right. So and it's like we're born, like when we were born we're trained to believe that the banks are safe and the government is safe, right? So even myself, 40 years old, for 48 years I've been taught that these places are safe places to put my money. And I think we're starting to see the truth here now, right? I want to talk about debt denial. Okay. Who is in denial? The consumer, the government, or is it the consumer about the government? Like, who's in denial about all this the most?
This is a very good question because I just had an experience where someone was heavily into debt, but she had no idea that these debts were so burdensome. But when I looked at it, I could right away see there's no way in a million years that with her salary, she could ever have repaid the debts. No way. Not even the interest on the debts she could have paid. No way. In other words, I think a lot of consumers, well, first of all, I have to explain something. Rich people, when they have an accident, when they have an unfortunate event, usually they have enough money to pay for the unfortunate event. Say there is flood, you have to repair. They have the money to do so. The very poor people, they have nothing. They have nothing. If anything bad happens, they are frequently actually forced to borrow money, to meet the eventuality. And so they become indebted, and then the debts grow because they can't pay the interest. So the bank just adds the interest to the loan, and then the interest has to be paid on the loan plus the interest. In other words, you get the compounding impact, which is very powerful. That is a debt that is a problematic debt, consumer debt. The government debt is another problem. And I don't want to give a thesis about this, but it's very complex because as of today, the government debt in the US is so large And at the prevailing rate of interest, the interest payments on the debt are essentially becoming the largest component of the budget. In other words, the government collects tax and they then spend the money on Social Security, on Medicare, on the army and so forth, and on the payments of interest on the debt. And this is growing because every year the debt is growing due to the fiscal deficits. Now the Fed and the Treasury Department, they would like to pay less interest on the debt. So they have a tendency to keep interest rates low. But if there is inflation, they shouldn't keep interest rates low. They should increase interest rates to essentially bring the rate of cost of living increases down. But they can't do that because then the interest on the debt is too high. So, I mean, they're in a kind of vicious circle at the present time. And in my view, it will be resolved by more inflation, not less.
Interesting. Well, look, I think when we talk about debt, like debts eat you alive. It's like gradually, and then then it's suddenly, right? It's like that's what happens. And if you know anybody, and if you do know anybody that's gone into debt or bankruptcy, it's horrible to watch because half the time they're totally in denial themselves until it hits them over the head, right? And then they're forced, and then it sucks. You explained in your letter that you considered an improvement in financial stocks to be preconditioned for a bull market. Now that makes sense to me, of course, but for a lot of people, it doesn't. Do you want to talk about that a little bit more?
Well, usually, but again, there's some analysts, they say rising interest rates are good for banking stocks, financial stocks, and others say now falling interest rates are good. But in general, strong business conditions are good for banks, improving business conditions and diminishing credit losses. But when I joined Wall Street in 1970, I didn't know much. So I took courses in technical analysis. And the technical analyst societies, I mean, a very sophisticated society in America, and they had great technicians. But in general, the technicians all agree when financial stocks are strong, it's a good sign for the market.
Can you elaborate right now on the potential risks of the U.S. consumer market?
I mean, my view is that the American consumer is much weaker than what the government statistics show, because the government statistics are massaged and doctored. I think the consumer, by and large, we have surveys in America. More than 70% of people live paycheck to paycheck. This ratio has gone up. Live paycheck to paycheck is a form of modern slavery. You get your salary, but most of it has to be spent on paying the interest to American Express and to Citigroup and on mortgages and so forth and so on. And you have less and less money to spend on necessities and on discretionary items.
Modern slavery. Let's talk about that, because I just believe that the banks encourage debt, the government encourages debt. They're all encouraging debt, which then make us a slave to paying it off and putting more money into the hands of the government. It's just ridiculous, right? And there's no one out there in the school system or education system that says stay debt free. It's crazy to me, right? So it's
You're absolutely right, and it's interesting that on Wall Street, that has, you know, intelligent people working, or I mean, you'd hope so, and they have so many economists and so forth, and that nobody's ever pointing out, you want to be free. You don't take debts on. You pay what you use, and you know, you are not burdened throughout your life with paying interest on your debts. because credit card debt is very destructive due to the high level of
19.9%.
interest rates.
It's insane.
I have a case in Thailand here. Someone needed money. And this lady, she borrowed money. I asked her, what is the interest? She said, I don't know. Then I said, go and check. The interest was like 20% a month.
It's
per
crazy.
month.
I know. It's nuts. It's nuts.
Nuts.
Yeah, absolutely, absolutely insanity. And like people got to remember, it's like when you're working to pay off debt, you're never, ever, 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 ever getting ahead. You're never getting ahead, right? And that's
Never.
that's a difficult place to be. Then we feel like slaves, and then we're not happy about our lives. Then we question about our lives and what we're doing, right? It's just not what we want to live for. We were put on this planet to enjoy this planet.
But you said it exactly the way it is. The elite is encouraging people to go into debts because if you're a car dealer, you're not going to make money on selling a car. Where you make the big money is financing the buyer of the car with very high interest rates. On that, you make the money. I was in the brokerage business. I didn't make my money from the commissions, but from the interest rate differentials. What people had, the margin accounts, they were hugely profitable when interest rates were 10, 15%.
So the elite are just getting richer and richer and richer off this.
The wealth inequality throughout history has been the same. Few rich people at the top in the pyramid and lots of poor people.
Who was that philosopher that talked about this? Man, I just want to pull out his name. He said like it will be the end when all the rich or like the few rich have it all. And we can even talk about the market, like the Nvidia stocks, like the top 10 stocks make up a huge percentage of the overall market cap, right? Like we are in a very, very, very dangerous position right now, I feel. And
yes, I agree with you. I agree. But most people will not agree with you and me.
Maybe fools seldom differ. I don't know. So we talked about Warren Buffett going heavy into cash, which I think is a remarkable thing to point out, right? Everyone thinks that he's crazy, or not everyone, but the retail investor out there. Let's talk a little bit about gold and silver right now. I think you talked a little bit about platinum in your last report too, as well. What about platinum right now that's kind of got you intrigued?
Well, I mean, platinum can be measured. I have to say, in monetary inflation, it's difficult to measure anything because everything moves against each other. And so I can say, for instance, is gold expensive or not? Then I can say, yes, maybe it's expensive compared to the price of a hamburger, because the price of gold may have gone up at a faster pace than the price of a hamburger. But I can say, no, gold is not expensive compared to the quantity of money in the world. You understand? So
yeah,
there are different ways to value assets.
Yeah.
And I take, say, the precious metals and look at the price of gold, the price of silver, and the price of platinum, how they move against each other. So sometimes the price of platinum is higher than gold, and sometimes it's lower. Now it is at the extremely low level compared to gold and silver. Also, the price of platinum adjusted for inflation hasn't gone up in the last, say, 50 years. But compared to inflation, gold has gone up. So, but again, measured by whom, the inflation? So at the moment, platinum would be, in my view, cheap against gold and silver, very cheap. And it's also cheap, absolutely, because the mining companies that produce platinum, most of them are losing money.
And so low platinum prices fixes low platinum prices.
Yes, I mean, people will not dig for platinum at the at the present price structure.
Yeah.
Mines will be closed.
What's what's the best way to get exposure in platinum?
Physical, or if you're more risk oriented, you can buy Siboney in South Africa. The symbol is SBSW.
Okay. SVSW. Thank you for that. I'll look into it. Okay, gold and silver. Like I was talking to Adrian Day the other day too as well, and we were trying to find a solution, or we were trying to find a bear case for gold and silver. Do you have a bear case for gold and silver right now?
Yes, I have a bear case for everything.
Awesome. That's what I want to hear. But that's what I want to hear.
I mean, every inflation leads to deflation eventually. The way every deflation is eventually replaced by inflation. These are cycles in the rate of price movements and so forth. And the asset inflation is so pervasive that we had in the last, say, 40, 50 years, 1980 to today. It is likely that some prices will come down meaningfully. Now, someone will say, well, you know, they print money and nothing will come down. But to this I respond, go and take a stroll through the main cities of America and Europe and look at what happened to the prices of office buildings. Many office buildings are down in price by 70, 80%, some by 50%, but they wipe out the owners because the owners had debts. And so if someone tells me assets that never go down, I say nonsense. Assets are vulnerable to price increases and price decreases. And when I look at the property market, the commercial property market in America, and I look at the valuation of stocks and compare the valuation, say, it's just an example. You take the stock market capitalization of America and you compare it to the 70s when I was started to work. In 1970, the stock market capitalization in America was 25% of the economy, of GDP. Now it's like close to 200%.
That's wild. Wild.
So I can say, historically seen, stocks are very dear, very high. And the high valuations are unlikely to expand forever. And I've seen this also in Germany during the hyperinflation. Stocks went up and then they crashed and then they went up again. You understand? The volatility will increase. So my view is once stocks go down, they will bring down a lot of other things as well. Because people like myself, I invest in stocks, but I also invest in gold and so forth. So if one collapses, I may be tempted to sell the others to increase my position in the one that has collapsed or to support the one that collapsed. So selling in one can trigger selling in the other.
Yeah.
But I don't know for sure. I'm telling you, the future is unknown. But I would think it very carefully and not assume that, say, some stocks drop 90% and others all go up. You understand? It's likely that the ones that dropped 90%, like in 21, the meme stocks peaked out and the SPACs and so forth, they dragged the market down until October 22. Then it continued to rise again. I'm just saying this period, 2021 to 2022 was a painful period.
So what I'm hearing is that there's a cyclical bear case potentially. And I think that's brilliant, because anyone who thinks that markets go up forever have amnesia. People think that markets go down forever are delusional. And
Yes.
and the truth is somewhere in between, right? Like
I was in Hong Kong I was the only one who said the property market will collapse because I had studied history and I wrote a book about the rise and the fall of cities. But now I think that property stocks or properties in Hong Kong are cheap, but not before. And believe me, in all my life, I've never seen Hong Kong people as a strong believer that their city would always thrive and that property prices would always go up.
Yeah.
I'd never seen anything that ingrained in people's head that property prices in Hong Kong would go up forever.
Forever and ever and
And
ever and
that the
ever.
Hong Kong people are smarter than any Chinese in the whole of China among 1 billion people. That is the mentality of Hong Kong the way it was.
Yeah. Marc, I always love picking your brain. That's awesome. You've been doing this for a long time. I've only been doing this for half the time amount of you. And I want you to pass on some knowledge to people that are younger than me. You've been doing this. What do you want to
You
tell
look
these
very
people?
young.
Oh,
You
thank
look
you.
very young.
Well, thank you. Yeah, what do you want to tell people younger than me? Like about just life, investing, like finding happiness. Where do you find this freedom, in what we do?
I think that it's important that people are modest. I mean, I'm not in favor of extreme frugality, but I think you can live a normal life without showing off, and you don't need always the latest cars and the latest assets that would boost your kind of standing. That you have some modest expectations. I mean, I have to admit that, I became much more wealthy than I would ever have dreamt in my life. When I finished university, I thought, if I can get the job and earn one day $100,000, that's wonderful. Or, when I grew up, $1 million was a lot of money. My father said, he was a famous orthopedic surgeon in Zurich, in Switzerland. He always said, oh, he's a millionaire. Million today, nobody gives a shit, cares about it. They have a book here, The Penniless Billionaires. This is actually quite a good book. It's during hyperinflation. People have $1 billion, in Zimbabwe, you have $1 billion, it doesn't help you.
Yeah, no, you're kidding. Well, what I think what's interesting there too, as well, you said, yeah, $1 million's not enough, right? But the society has told us that $1 million's not enough because of the standards of living they want us to have, right? $1 million, $1 million is enough for me if you want to put me on the river in Thailand and do yoga every day. Perfect. Right on, Marc.
And so, the happiness, nobody will make you happy. You have to find your happiness within you. But you can improve the chances of being happy by avoiding the company of unpleasant people. You understand?
Right.
People can be people are not nice. That is an illusion to think that, oh, he's a nice guy and so forth. People are not particularly nice. So you have to cope with that. And then because in my family, my wife worked and I still work. I don't resent work as being, burdensome. Of course, if you have a hangover, you don't like to get up and start to write and so forth. But you have to make sure that you don't have a hangover every day.
Not every day.
But in general, my observation is people who work are happier than people who don't work. Number two, it is a headache to have your own business, no, unquestionably. But in general, people, when they work for themselves, are happier than when they are working in a factory like slaves. Whereby nowadays, in factories, the workers are treated in general nicely.
Oh, a little bit better than 50 years ago, for sure.
Well, 100 years ago, I tell you, I have pictures of coal miners in Belgium
Oh,
and so
yeah.
forth. Uh, because people always say in the US they exploited workers and so forth. But to these people, I always say, why did people in the 19th century move from Europe to the US? Why? Not because of social security contributions they would receive. They worked because living conditions in America were so much better than back in Europe.
Yeah, that's correct.
That's correct. I mean, you go to Ireland in the 19th century, 20th century, they had starvation.
Yeah, you're leaving. You're doing anything to start feeding yourself.
Yes,
Yeah,
anything. Yes,
yeah, yeah.
yes,
We're amazing creatures as humans, right? What we do for
yes.
survival is unbelievable, right?
Unbelievable. I
Yeah,
mean, worse than animals.
yeah, yeah. Marc, thank you so much for your time today, man. That was awesome. And I'd love
And
to have.
regarding investment, I just like to say, we don't know about the future. I would take the attitude, I don't know. The probability is that this happens, but I would always have some reserves and
Yeah,
not. I've seen lots of people, they lost everything trading, lots.
yeah, for sure.
And I would be prudent.
Yeah. The sad thing is we've seen people lose a lot of wealth from trading, but the more horrible thing is that we've seen a lot of people take their lives because
Yeah, yeah, sure.
yeah, and that's horrible,
I've
right?
seen, I've
It's
seen people crying, even wealthy people, because they lost so much money. Then they
mhm.
had to go and explain it to the wife. It was not about the money, but explaining it to their wives that they were scared of. Okay,
Yeah, how
take
the
care.
universe works. Take care, Marc. We'll chat again. Okay.
Yes,
See you
with
later.
pleasure. Bye
Yeah.
bye.
Well, that's going to be a wrap for today. And you can stay up to date with Marc at his website, gloomboomdoom.com. If you haven't already, be sure to join the Kinvestor Network by subscribing to our channel and follow us on social media. And don't forget to like this video. I think there's some really valuable insights by Marc. Until next time, happy investing.